Hello and welcome to India Market Close. The big event of the RBI policy meet is behind us. The governor very conclusively hinting that the chances of a rate cut are very unlikely until inflation targets of 4% achieved, and the markets do not like that. On back of that, the Nifty, which was holding well above 46,000, has actually sold off quite sharply, 526 points lower, 1% cut on Bank Nifty is what we have. The Nifty and the Sensex itself are looking quite pained, 220 points off on the Nifty. The Sensex trades the cut of 750 points. So if the bulls and bears were struggling to hold on to levels, the bears, of course, having their field day or day in the sun after the governor pretty much stayed on his stance and, of course, did not comment very much on liquidity either. Well, that's the broader market. The outperformance across the broader market continues in today's trade as well. The Nifty mid-cap trades with a marginal gain of 70 points. The small-cap index, though, on the other hand, trading with a cut of 24 points. Well, beyond the macros, the bigger focus on the street was all about earnings, and the large part of the broader markets were reacting on back of either good numbers or bad numbers. But let's take a quick look at what's happening on the Nifty 50 first. The breadth of the market is very clearly biased towards the downside. You've got a whole lot of losers for a very few handful of gainers in today's trade. Well, Britannia posted numbers that the street was disappointed with yesterday. Saw some selling pressure in trade yesterday. The selling continues into today as well, down about 5%. Well, ITC at the day's low point, 4.6% lower. The reason is that there are reports on the wires that BAT, which is British Tobacco, is looking to pass stake in ITC. We'll try and get more on that from an analyst and what it really means for the stock too. Nestle again post-earnings week. FMCG as a whole pack really has been having a down day from the get-go in early trade. Along with that, Tata Consumers, I'm not sure why the street is disappointed, but the numbers from Tata Consumer Stable weren't actually too bad. They've seen growth across most segments. They had an exceptional item on their profits, largely on back of the acquisition costs that had to be absorbed by the company. UPL looks weak. iBank, banks like we said, are also trading much lower. Through the first part of the day, it was the public sector banks that were gaining, and in fact SBI single-handedly was holding the markets and the Bank Nifty together. Still gains and does well in trade, 4.5% higher is what we have. But unfortunately, the other banking names are seeing selling pressure, and that is what is taking Bank Nifty lower. Power grid, markets like those earnings. The stock is up 4.2%. OMCs continue the rally in trade today. Remember, a few days ago, you also had a report by Morgan Stanley saying a re-rating in this space is very likely, and on back of which your BPCL looks good, Coal India looks good. So interestingly, HCL Tech is also seeing some buying. TCS is looking okay. Auto is also pretty much having a flat day. But Hersh, I think the day belongs to SBI, and on the downside, FMCG is getting whacked, and I don't know why, because some of those numbers were not actually that disappointing.
Well, yes, absolutely. So it's an earnings, it's an earning-focused kind of a day when I'm looking at stock-specific actions. And that's correctly put up by you. Let me quickly take it to some big earnings which came out. You look at the likes of a Cummins. Strong set of numbers. Stock is doing quite well in trade. Power grid as well. Margins going up from around 87 to 88.5%, and that one is also flying away in trade. You have the likes of an EPL as well, up 2% on the back of numbers. Some counters which didn't do so well on the back of numbers. Again, you look at the likes of an Ashok Leyland. That one, Tata Consumer, seems to be lower by almost 3%. Samina touched upon that. Greaves Cotton, Sobha are some of the other names which are having a mixed kind of day. Sobha doing badly, but Greaves Cotton doing fairly well after a good set of numbers. You also have HMA Agro and Ratan India, both of which also declared numbers and were buzzing, at least on the back of numbers. Some taper with regard to that buzz. In terms of other stocks, other counters which are buzzing on the back of news, you have the likes of a Paytm down 10, TRF up 20%, second consecutive day, and ITC is down 5%. Samina touched upon that as well. Back to you, Samina.
Afternoon. The broader markets, of course, weak on back of a little bit of disappointment in terms of what the Reserve Bank of India did, even though they played the part, remain status quo on rates. That was 100% consensus, where no expectations were on the rate. There was a little bit of hope that the tone of commentary would change or sound a little more dovish, and there may have potentially been a change of stance, but the governor pretty much making it clear that none of those parameters will be changed in the foreseeable future. And they also talked about the fact that liquidity is being managed because the RBI is very nimble when it comes to that. FMCG is seeing weakness. You can attribute it to earnings. You can attribute it to the fact that rural demand has largely been weak and the markets don't seem too happy. Or you can simply put it down to the fact that there have been no rate cuts, and FMCG or any sort of sectors that will get a bump up on back of lower rates is seeing some selling. But let's move the focus back on to the technicals of the street. Jay Bala, founder and chief market technician of Cashthechaos, joins in. And we've also got Aditya Shah, founder of Hercules Advisors. Hi, Jay. Afternoon. It's an interesting day. The market spent quite a bit of time consolidating. The VIX had also come off a little bit. Important parameters were all indicating too that there would not be too much downside pressure. What we are seeing right now post-policy is some weakness. The street is down, Nifty is down about 1%. Good time to buy, you think, or go long?
Good afternoon, Samina. See, my opinion is slightly different. And, if you see the price action of the markets for the last several sessions, it's been trying to close above 21,950, and that's getting rejected. It's trying to close below 21,350, that's getting rejected. My sense is that this market wants to cool off, and it's trying to get lower from here. And we just need markets to confirm that it is heading lower. 21,661, the market is about 21,698 now. If 21,661, that gets printed now, that will be the early warning sign that this market is trying to weaken. But we want the markets to close below 21,460. That will be a confirmation that this market is considerably trying to cool off, predominantly due to weakness from the banking index, which has been a rank underperformer for several months now.
Aditya, I'm not going to spend too much time on the policy, but what is happening in FMCG, in your opinion? Is the disappointment stemming from earnings? Or is there more to it? Is it just healthy profit taking that we're seeing? Because stocks like Britannia, Tata Consumer, ITC, of course, is news-based, are all down 4 to 5% each.
So the perspective really is all the stocks that you've talked about, they're really very highly valued. And a little bit of disappointment on the earnings is triggering the sell-off per se. So in my opinion, in good names, it's an opportunity to buy. We've seen likes of Trend coming out with their results yesterday, and they were fabulous set of numbers that they have posted. One common thing with the FMCG space that you really need to check is the valuations will be extremely aggressive, and they have been extremely aggressive for a couple of years now. So the perspective is slow growth together with high valuation is a recipe for slow returns in the near term. So in my opinion, selectively you can buy companies like ITC, companies like Trend, or companies like Tata Consumer, where longer term visibility is still there. There you can go ahead. Otherwise, you have to wait and watch.
Sure, Aditya. Aditya, we did hear from Jay, who spoke about banks. I think you track banks extremely closely. How are you viewing the sector as a whole, especially given the fact that there are rate cuts probably on the anvil? No commentary yet on that, but they're probably not too far away. So how do you view it, public versus private?
So Harsh, we've spoken about this before as well. We are entering into the second leg of credit up cycle. And in the second leg of credit up cycle, the quality banks will start to perform much better as the asset quality continues to improve for them. And the banks where the underwriting processes are not very stringent are the ones who will start to struggle now. We've seen the RBI already warn on the unsecured side of it. And we've also seen some banks report some bit of slippages on the unsecured side of it. So in my opinion, the party of the PSU banks, where they have outperformed the private sector banks over the last 6 months to 1 year, 6 months, about 1.5 years, that will slowly start to abate. Good private sector banks, where the asset quality will stay intact as the credit cycle continues to move up, are the ones to watch out for, in my opinion. Also, similarly, on the NBFC side of it, the quality NBFCs will continue to do really well, and the smaller NBFCs again will have asset quality issues. So, in the markets, nothing is permanent in nature. The first leg of re-rating of PSU banks is now complete. Now we will move on to the second leg of re-rating of these banks, second leg of credit cycle, where good quality banks will start to perform. And mind you, not to say SBI is not good, very high quality. SBI is also a very high quality franchise. So you need to selectively look at PSU banks, but top private sector banks, which have not done anything over the last 3.5, 4 years, could be the top bets for me in 24 and 25 as the credit cycle continues to move on.
Right. We have earnings as well from Apollo. On the top line, there's a slight improvement. On the profitability, there's a dip. We will come back to that in a minute, but I just want to quickly take a look at how these insurance companies are doing. They were looking very well placed yesterday and for most part of trade today as well. LIC is still up 8%. New India Assurance is looking good. GIC is having a good day. Most of those insurance names, really. Jay, you want to comment on it? Technically, on the charts, would you go long on any of those insurance stocks, or for that matter, even go short and, on expectation that there would be some profit taking?
See, the insurance space is a little bit mixed, and we need context here. And LIC is leading from the front, and there is a considerable movement in New India Assurance. These are the two names that I like from the public sector insurance space. But if you look at the private sector insurance space, most of them are in a counter trend rally, like HDFC Life, SBI Life. They are all in a ICICI Pru. They are all on a counter trend rally. So if you want to buy the dip, you are better off focusing on LIC and New India Assurance. But New India Assurance, I'm telling you, it's probably reaching an exhaustion level. But be careful here. But in the private sector space, in the insurance sector, you want to do something, it's ICICI Lombard. That's looking like it's got further upsides to work with. So that is looking interesting for me. Other than that, I will treat the rest of the insurance rally as a counter trend bounce. So avoid the other names within the life insurance space, except LIC, New India Assurance, and ICICI Lombard.
Got your point, Jay. Aditya, if I can have your views very quickly on this, I'm short on time. With regard to the likes of some of these insurers, General Insurance, New India Assurance, some of these names have really run up. Your views, maybe 2-3 key reasons which you feel why some of these have really re-rated.
See, LIC was trading at below its embedded value, and that was the real reason why LIC stock has moved up. Now it is trading at a premium to its embedded value, and slowly and steadily it will settle down somewhere in the 1.5 to 2 times the embedded value. That is my guess on the LIC stock. Per se, yesterday in the Parliament committee, there was a recommendation that on general insurance, particularly health insurance, the GST rate should be rationalized from about 18% to a lower rate. So that was the real reason why all of these stocks were really rallying out. That rationalization of GST on these insurers would be there. And also the Parliament committee has also recommended that Ayushman Bharat should be extended to a lot more people in this country. So that was the whole criteria that health insurance penetration will start to move up in this country. However, these are very long-term stories and will not happen in the shortest period of time. But health insurance and general insurance, both of them are sunrise industries and must have in the portfolio.
Understood. I'm going to quickly go over to another one which is in focus today, Paytm. We had the RBI monetary policy, and I had very little doubt that the governor would be quizzed on everything that's happening around Paytm. The stock now at flatline, lower circuit. Now, I want to try and bring out a few points which the governor and the deputy governor Swaminathan put across. What they said was this was supervisory action for persistent non-compliance. They also suggested on a no-name basis that generally action which is taken in this regard is post years of bilateral engagement, and the emphasis is always on keeping engagement on. But if deficiencies are not repaired despite time given, they said that they have to continue to take into account the best interest of systemic stability and protection of customers, and due to which they've had to take some of these actions with regard to Paytm as well. Now, they've suggested that generally they take their time to engage with entities before, really acting upon it in this fashion. But they're going to issue some FAQs which will hopefully clear the air, especially from a customer and consumer standpoint for Paytm users. While we await that, and also what they clarified was that they are not against fintechs. So I want to go straight to Aditya because I know he has certain views with regard to Paytm. And Aditya, I'll try to play devil's advocate here. Paytm, roughly 30,000, maybe now sub 30,000 crore in market cap, 8,000 odd crore in terms of its current assets, cash balances, plus receivables, etc. At what point does this start looking good to you?
See, Hersh, there are a couple of things that we need to clear out first. It's not about fintech or it's not about banks. Whenever RBI sees non-compliance, RBI acts, and RBI has acted before. So what the RBI governor has clearly said today is, after engaging with Paytm for multiple number of months, they have found that the compliance standards have not improved, and that's why they have taken this regulatory action. Apart from the market cap of 30,000 crore, the important thing to really understand right now is what happens to the existing Paytm business. Does the RBI want Paytm to completely shut down its payments business, or the RBI wants the payments business to continue with some other banks, or the RBI wants some other bank to take over Paytm's payments business? These are some crucial answers that the RBI needs to come out with and Paytm needs to really answer. On top of this, the Paytm management has also said that they are going to stop loan growth until clarity emerges. So in my opinion, a normal retail investor who does not like to take too much of risk should wait for clarity about how the Paytm's business model is going to evolve post this regulatory action. Those who are speculators, who are punters, they would start to look at a market cap of 10,000 crores or something like that. But if you were to ask me, I will not speculate right now because there is too much of non-clarity from the regulator, from the company itself about how are they going to evolve going forward. So if the business is not very clear and you are speculating on the stock price, it's just pure play gambling in my opinion. So wait it out. RBI will come out with clarity about what they want Paytm to really do. And from there on, you have to take a guess. In my opinion, you must not speculate right now at this stage. Let the stock price settle down and let the circuits get opened up so that if you want an exit, you can get an exit as well.
Right. Stay with us. In fact, here's what Deputy Governor Swaminathan J had to say about Paytm's situation at the MPC press conference. Listen to that while we take a break.
Yeah, as a regulator, we have various tools in the kitty. And it's not necessary that every single tool will be deployed in every single situation. That we make our own assessment to the scale and proportionality of the issue, as well as the tool that we will have to use at different points in time. So one size fits all kind of solution may not work in such situations. So, I would like to stop there rather than, trying to elaborate on that. We may use certain tools, may not use certain tools, but it is after a due consideration that we do.
Welcome back. You're watching India Market Close, and post-policy, the market seemed to be sulking in trade. The Nifty trading at the day's low point, Bank Nifty as well, not actually looking very good in today's trade. Consumption is also seeing some selling pressure as we see it. One stock in the FMCG pack that also seems to be having a bit of a down day today is ITC. The stock trades, and that's down about at the day's low point, 4.5% cut, coming in after its largest shareholder, British American Tobacco, said it was working towards completing the regulatory process to par its stake in the diversified conglomerate. Remember, they own over 29% stake, and in the last couple of months, we've also heard from BAT, which is the largest stakeholder in ITC, saying that while they would be looking to reduce their stake, the fact remains that FDI rules for tobacco in this country are fairly tough. But we've got with us Shirish Pardeshi, senior analyst for the FMCG pack at Centrum Broking, joining in to talk to us about what this really means and if it really has any long-term impact on ITC. Shirish, thanks for joining us. Shirish, now this was in the news about a month ago. We saw a little bit of a stock reaction then. We moved on. For all through half of December, most of Jan, there was nothing that was talked about. Now, this is back on the wires where BAT is looking to par its stake in ITC. What has suddenly led to this discovery again?
I think if you follow this question repetitively coming in the BAT con call description, I think at this point of time, what we have to keep in mind that we really can't make it out from the news on the face of it what BAT is thinking. But the demerger of hotel business which is there, so there is a lot of value. And I think from the shareholders' perspective, still to my view, there is a lot of value which is there. On the other side, we also have to keep in mind that BAT also has a lot of debt on the book. And this investment, what they have done, to my best understanding since the beginning, they wanted to get the entire stake in the company. But that has not happened because of the regulatory conditions in India of the FDI. On the other side, if this actually happens, or if may take some speed over a period of time as that gets the approval, the entire stake will not get sold at one go. It is, I mean, there is a power to drive the stock up or down. The third factor which is there is that to getting the regulatory approval itself and then the FDI approval and the RBI approval, it's a long-term process. While I can also say that this question has been many times, BAT has said that it is one of the things the investment can pair. But I can see that there is a lot of value, and if there is a negative reaction, why would BAT sell? That's my argument. That's my purely a hunch that they would like to keep the stock going up rather than it is coming down.
So Shirish, if I have to understand this, and I'm guessing this is what investors would want to know, this, like you said, has been talked about time and again in the past, and nothing really gets done with BAT. And BAT has also said that the FDI regulation in the country is also very tough. So it's not as if, they decide to pass stake and the next thing we know is that they've exited the company. Keeping that as the backdrop, would you buy ITC even at these levels? What's the call that you have on the stock? Is the BAT stake sale an overhang for ITC at this stage, or completely unrequired at this stage?
See, I can't deny there is a news flow which is incrementally taking a full decibel noise at this time. So obviously stock will be under pressure and people will then guess when it will happen. But fundamentally, if I have to comment on the company's performance, look at the business, what they have developed in terms of FMCG, staples, foods. It's doing fundamentally well. The investors' concern 3 years before for that why the company is holding the high business, which is hotel. And now there is a way forward that companies clearly come out that there will be a demerger. So there will be definitely a value. Now, the point here is that cigarette business is going to be a cash cow for the company for many years, and it will continue to do that. But if I see that on the backdrop of cash flow, company has been able to develop the business, and look at the business, it is throwing a lot of positive margin front. You look at the growth, what they have been delivering over last 5-6 years. I think I would say there is definitely a value. It's an individual investor call at what price they want to buy. But certainly, I would say that this kind of sharp reaction on the stock is unwarranted.
Got your point. Hersh also joining in, Shirish. So, of course, British American Tobacco, one possible overhang. Any others that one needs to look out for where ITC is concerned, given that there's been a good run-up on the stock price over the last 2 years?
I don't think, I would say that the stock, when you compare the FMCG peers, it's that the business is little complex and not necessary that all the segments are firing at the same speed and same efficiency. So that's why when you look at the performance of the stocks, I think the commodity business is sitting there. There is a high value add paper segment is sitting there. And also there is a FMCG business. So I would say that if you strip off the all businesses value, I think it is a much more value. But since it is under one roof, I think some or the other things will happen. Something will go up, something will come down. So as a company, when you look at the consolidated numbers, you will not be able to make out that what's happening in the company. But I would say that there is a lot of value and there is a merit that one should not short the stock at this time.
Sure, understood. Thanks so much for all of that perspective, Shirish. Of course, ITC in focus on the back of that news. And Shirish, thank you for giving us all of that with regard to what you feel and Centrum feels on ITC. But I also have with us Nitin Raheja, who's the Executive Director and Head Discretionary Equities at Julius Baer. Nitin, if I can take the question to you. What do you make of what's happening with ITC, and how do you look at valuations in ITC at this point, given the kind of run-up it's had?
So we really do not get into stock specifics and comment on that. But clearly, I think IT, one of the key elements that has driven this company over the last few years has been this whole endeavor towards value unlocking. Whether it's through the hotel business, whether it's through distribution of dividends, because this is a cash flow machine. And it's been using cash flows to generate, newer businesses from the traditional, the cigarette business. So we think that, longer term, I think any correction is a positive sign because there is clearly value that sits there.
Understood. Thanks for that, Nitin. I'm going to quickly move across. Lupin, we spoke with the management earlier, and, they've guided with regard to how their margins will shape up in coming quarters. Let's go in and listen into a slice of that conversation. Of course, the numbers itself were a beat on all fronts. Listen into a slice of that.
If you look at the US markets, so you have risk, both Spiriva and Albuterol. That's really helped. And essentially, if you look at EU also, it's we have Foster and the like as well. But more importantly, there has been secular growth across all our markets, including India, where the productivity has really paid off. We added about 1,000 odd people in the last quarter of the last fiscal. So that's really paid off. So from our perspective, whilst there is a lot of room for optimism, given the current trajectory and the like, and there are, of course, other, all of this will certainly continue from our perspective. But there are also negatives in terms of potentially disruptions because of Red Sea related issues, because of air freight going up and the like. So you'd like to play conservative in that sense, right? And I would say anything between 19.5% to 20.5% in the quarters to come would look pretty good for us.
Right. Nitin, Lupin, fantastic set of earnings. They've managed to outperform quarter on quarter in terms of beating street expectations. The stock is looking flat to slightly positive on a down market. Would you look at adding Lupin tactically to your portfolio?
Like I mentioned, I'm not going to comment in terms of what we will add to our portfolio or not, to be honest. But look, I can just give you a broad perspective. I think the generics pharma space is looking good. There is a short supply in the US, and prices have bottomed out in terms of whether you take generic drugs out there. So I think clearly it's looking good for generic pharma in the next year as we look at it. They're also using, some of them have had this big blockbuster drug Revlimid. Cash flows have been generated very strongly, and they've been shoring up their balance sheets because of that. So overall, we have a positive view on generic pharma, and we think it is a good tactical play.
Good tactical play, and that's what we've seen for Lupin, which has been leading amongst most of its other pharma players. We'll take a break, we'll come back, but on the other side, we'll take you through the top buy today, sell tomorrow picks from our markets analyst.
Right, welcome back. You're watching India Market Close here on NDTV Profit. I'm going to quickly take it back across to Nitin and cover one of the pieces that we spoke of earlier on the show. Nitin, we spoke about ITC. You suggested how valuations were comfortable there in comparison to some of the other stocks. Now, Trent came out with a very solid set of numbers earlier this week. Stock was up and away. And we also had the likes of a Tata Consumer, decent set, in fact, slightly better, but the stock doing nothing in trade today. How should one look at FMCG and how do you view valuations?
So I think, look, FMCG stocks are not cheap, but they've traditionally been looked upon as defensives, and defensives in a market which traditionally, would be volatile or is bear market. Given that scenario, I mean, currently we are in a market which is focusing on rewarding growth, which is also seeing a lot of sectoral rotation that seems to be taking place from one sector to the other. I think it's not, unless and until there is a clear trigger, like we've seen in the case of a couple of FMCG players, where the results, otherwise most of these FMCG players are seeing a slowdown as far as the rural market is concerned. And hence, really we believe that from a stock price and value perspective and the growth perspective, they really do not present great opportunities in the short term.
Your top trades right now, anything that looks tempting to go short on? Jay, that was for you.
Oh, okay. FMCG, I'm sure you're not talking about the whole market. When it comes to bearish setup, I'm liking Wipro at this level. Wipro clocked a high on January 15th, and a couple of sessions ago, it's clocked a lower top and it started to move lower. This is looking like start of a down move for me for Wipro. So place a stop above 505 and look for a drop towards 440 to 410. There is a slightly higher risk shorting opportunity in Adani ports. So you're better off looking at it through puts, so that way your risks are controlled. So I'm looking at Adani not crossing 1292, hence that might be the stop. And a target about 1089 is what I'm seeing as a short-term corrective move for Adani. These are the stocks that are looking short for me.
Nitin, what we saw with today's policy, it wasn't disappointing, because I think our expectations are also very controlled going into this policy. But very soon after the policy happened, you saw a whole bunch of banks actually sell off. Now, barring SBI and maybe PNB, the rest of the banking pack was looking weak. How do you feel about banks at this stage? Are you constructive on banks? And if yes, between private and PSU, where would you put your bets?
So, I think if you look at banks, they're really seeing more of a liquidity-driven sell-off. Because FPIs have actually been big sellers, and if you see the FPI holding in banks, it's come down dramatically from over 30% that they were holding. So I think liquidity pressure continues to exert itself in terms of selling that we see in the sector. But that's not the case with PSUs, and PSUs, by the way, were under-owned in the FPI basket. So hence, you probably saw, they've continued to do well. So I think banking is a case where we are positive on the sector. We think valuations in the sector are very attractive. There is a short-term challenge which most banks are facing, because we have seen peak margins for the banks in the last 1 year, and now as liquidity has been tight in the system, what are we seeing? We are seeing a scenario where the public sector banks, which are sitting on surplus liquidity, and also have an ability to sort of garner deposits, and the whole credit deposit ratio is far better for public sector banks. So in the short term, we see the PSU banks doing well. I think in the longer term, I think the private sector banks are going to come back, because the more they're getting sold into from a valuation perspective, they're becoming even more attractive.
Got your point there, Nitin. It's that time of the show where we get you all the FNOQs that have come through the day, as well as how we're looking at some of the futures and options data. And I have Agam standing by. Agam, talk to us about what you're looking at.
Right, so a very, very interesting day being panned out today, and certainly a very choppy first half of the session. After that, we've had a relative quiet, as far as the markets go. But the Nifty has come off by nearly 1%. Currently around the mark of 21,700. Remember, this is a little bit of an important point. At least in the last 3 or 4 odd sessions, it's 21,700, which have now become a little bit of a base, at least in the near term. We're still seeing an increase in open interest towards what potentially looks like shorts at the moment, up around 3.6%. The Bank Nifty, of course, is the other space where we have seen even more weakness, down around 1.7%. And this is, remember, despite the fact that we have seen that PSU rally. Of course, there are not a lot of PSU banks in the Nifty banking index as a whole, which is why we're seeing that weakness come through. A lot of this is on account of Kotak Mahindra, which is also declining substantially in trade today. Now near 7% added in open interest as far as shorts go in the Bank Nifty. Now let's talk about the options market. And, as I was mentioning earlier, we were seeing a lot of writing around 21,700 puts as far as, that particular strike goes. Well, we've really seen the markets test that. It's very unlikely that we will close below this mark. Of course, we have 15 more minutes left, and highly likely that we will close somewhere around 21,800 and 21,700 in today's day of trade. That's where the expiry is most likely to end. Of course, in terms of change in open interest, as one might expect, a little more writing as far as calls go. In fact, a lot of traders took the opportunity to go and sell the 22,000 calls very earlier on in the trade and earlier on in the day. This is before the RBI monetary policy, and they have been paid handsomely well. On the other hand, all the put writers, well, they had to a certain extent, run for cover, especially after the speech had ended. Let's take a look at stocks then and see how things are panning out there. And we are looking at Lupin, PI Industries, and Power Grid. all of them are looking at longs building in. And in terms of all the stocks which are seeing unwinding, well, we have a bout of longs unwinding in Maruti Suzuki, Delta Corp, SAIL, as well as Balrampur Chini. So keep an eye on that. And of course, now that the big event is behind us, there is a contraction in option premiums as far as the index is concerned as well. So that is something that we need to keep in mind. That said, tomorrow is the final trading day of this week, and which has been a very volatile one as well. But we likely could see a little more traction tomorrow too.
Or you could see a market that may be missing and lacking cues, so may actually turn out to be fairly sideways. But Zomato reported numbers just a few minutes ago. We will get our research to cover that for you in a minute. Numbers are actually looking really good. The stock is up 5% on back of that, but we'll come back to that in a minute. Aditya, have you been tracking Trent? I mean, this one is probably one of the best stock performers in our time. Last year as well, outstanding. Earnings were fantastic. And now the stock, only in the last 2 to 3 days, is up 30%. Even at these levels, do you think there's enough value in Trent?
So Trent is undergoing a massive transformation. We've always known Trent as the West Sides of the world. But now they have got a separate brand, which is called Zudio, where you can value buy in a very organized manner. So Zudio is really driving the 50% growth that Trent has really reported. We've been tracking this stock for the last 1.5 years, and we are seeing how Zudio is being ramped up by Trent. So my perspective is this growth should continue for Trent. However, the stock is extremely expensive, and one should be really very careful if they want to take a new entry on this stock. If somebody has this stock, then you should continue to ride this up move that Trent is really making. But for new entry, the stock remains really very expensive.
Sure, got your point, Aditya. We also have Zomato's numbers, if we can quickly have that on our screens. But let's have a look at the stock price. That's up and away. There you go. Your EBITDA number has come in at 51 crore versus a loss of 101 crore. That is slightly above, or rather quite a bit above what the street was anticipating. Even in terms of the profit after tax, the consensus suggested 86 crore profit after tax. It's come in sharply higher, 138 crore. So definitely it's done quite well. Even the revenue number is slightly better than most were expecting. 3,200 crore, we were expecting a number of around 3,100 crore. So around 3 to 4% better even on that revenue count. And Zomato doing well on the back of that. Let me come across to Nitin with regard to Zomato as well as Paytm. If I can club the two, of course, apples and oranges. But Nitin, talk to us about some of these fintech plays. Any ones that interest you in particular?
So, I think if you look at fintechs, what are we seeing in the last 1 year? A lot of them have gone back to the drawing board, worked on their business models and come back. Now, among one of the key elements that, however, the episodes that we have seen in the last few weeks and before have shown is that in a lot of these companies, corporate governance is yet an evolving issue. So you have this evolving business model, evolving corporate governance, which is not at the peak. So, we don't see too much of value, although some of these business models might succeed going ahead, but then you have to be ready for the kind of volatility that we saw associated with a fintech name last week. So I think we are sort of cautious towards that. We like the sector from a perspective of, we think these are new business models which are evolving, which are here to stay, which are going to be disruptive. However, we don't think some of the names which are listed necessarily present value.
Right, Nitin, great having you on the show today, sharing your perspective on the markets and sectors that are of your preference. Thank you. Aditya, what do you make of Power Grid? Pretty good quarter in terms of earnings. The stock is also trading higher. What is the view on Power Grid at these levels?
Unfortunately, I was not able to look at the numbers, so would not be able to comment right.
You have a technical view on Power Grid, the stock at 276. It's off the day's high point, but still holding steady.
Yeah, that's right. Power Grid, in my opinion, hasn't completed its up move that started from, somewhere about early last year. probably got one more sequence of higher highs to complete. Most of the PSU names, barring the banks, they look like they still have further upsides to work with. In fact, I'm bullish on bullish on Bharat Electronics, BEL, and I'm having a price objective of 210 out there. I think if the stock were to close above 187, that will convince me that the short-term correction is over and is heading towards 210.
All right, thanks for that, Jay. I want to also try and cover Zomato with Aditya. Aditya, your views with regard to Zomato. I know we've spoken about, Paytm. What's your quick view on Zomato, if you can quickly help us understand?
Zomato, I would be looking out for Blinkit's numbers. Blinkit is the one which is really a drag on Zomato's numbers, the first point. And the second point is how the average order number has improved. I believe in the number it would have improved. So we need to check that and how Zomato Gold is really shaping up. Again, I am very cautious. The stock is not really very cheap, even though they have now swung into profitability. But I will need to wait and watch how Blinkit really behaves and how the losses in Blinkit are really controlled by Zomato.
Right. Well, that is Zomato. The stock trading flat. It's off the day's high point, interestingly, but it's been a really good quarter from Zomato, at least on the face of it. They've swung into a profit after a loss that they reported in the same quarter last year. Mahima, what do you have? What are those numbers looking like?
Right, Samina. So they've clearly beaten the street estimates. The revenue is up over 15%. EBITDA has literally grown to 51 crores. The margins have been at 1.55%, and net profits has literally grown fourfold, which is at 138 crores. The street estimates suggested that the profits will be around 86 crores. However, they've reported a net profit, consolidated net profit of 138 crores. So overall, the numbers look very good. The press release is yet to come out, so we'll be getting the numbers of Blinkit losses, how they've worked out very soon.
Right, that's Zomato for you. On the charts, Jay, do you have a trade?
No, Zomato is definitely an avoid. It's going up on, precipitously losing momentum. And so it's an avoid for me completely. And I know probably we could have seen a short-term top around 149, 150. So, a little bit. So, and I'm a bit, careful about such names. So that's the reason why it's an avoid for me rather than being a short. So, so I'll be very careful there.
Sure. Right at the thick of earnings, you have Power Finance Corp also declaring its numbers, flashing at the bottom of your screen. Stock up just about 0.5%. We'll come to that. But, Jay, let me stick with you. Your calls for the day, BTST?
So I would look at, Bharat Electronics as a BTST and place a stop at about 179 and look for the stock to scale 190 tomorrow.
Aditya, do you like anything that you've seen that you want to recommend to our viewers?
Nothing as such. The only recommendation is we are in a roaring bull market. And in a roaring bull market, everything really moves up. You need to do a quality check and a fundamental check on the stocks that you are owning. And please make sure that the stocks you are owning have good fundamentals so that if the market corrects as well, you don't get wiped out.
Right. Be wary and careful in this market. That's the advice coming from Aditya. Aditya, another one that I want to ask you is in terms of spotting trends. We've seen fertilizer and chemical names not doing too well, even in terms of earnings. How many quarters out do you think is a recovery for these sectors?
We've been tracking the chemical sector very, very closely, and we feel that by the end of 24 is somewhere that green shoots start to get observed on all the chemical makers. It's not a short-term play, however. Valuations is significantly corrected, and you have seen the only sector trading at the 52-week low across all stocks would be the chemical sector person. So what you need to really do is it is a very heterogeneous sector. You need to really observe the companies, the commentary of all of these companies, and then come to a view about which stocks you want to really invest in. However, in the short term, do not expect any good returns from the chemical companies. Only in 25, in my opinion, calendar year 25, is where some bit of growth could start to come back to all of these chemical players.
Sure, got your point. Aditya, I also want to try and talk to you about, some of the realty names. We've had a stellar run in realty. Is this kind of, maybe not the same return, but is the uptrend sustainable?
So, in our view, real estate sector is also a cyclical sector. We are now in a real estate up cycle where builders are getting the price that they are asking for. So, in our opinion, this cycle will continue for the next 1.5, 2 years. However, the stocks across the sector, be it the developer in Delhi, be it the developer in Bombay, they are not really very cheap. They are really very expensive now. So, those who have got these stocks, they can continue to hold on to these stocks. But in our opinion, now the real estate developer stocks per se are really very expensive. What you need to really do is you need to look at the real estate ancillary stocks now. That is where some of the stocks have not rallied on the tile side of it, or some bit on the paint side of it. The smaller companies per se is what you should be really looking on, or the cement stocks is where we are very bullish on as the infrastructure cycle continues to really move on. So positive on real estate. However, stocks are really very expensive.
Yeah, Aarti Industries is facing some heat ahead of its earnings. Is there an opportunity to further short the counter after a 5% cut we are seeing?
See, the counter is a little bit illiquid, so otherwise I would have said yes. So, it is looking negative, but considerable amount of caution there. And if you can short it with some amount of risk management in place, yes, in that sense, yes, it can go a little bit lower, somewhere close to 575 to 560. So yeah, there is still downside potential there.
Sure. If you look at Surya Roshni very quickly, those numbers pouring in, but the stock is taking a beating all of a sudden post the numbers, 5.5% lower. That's a crack that we are seeing. Also, with regard to, if I can ask Aditya, with regard to Nifty as well as IT, Aditya, do you prefer the larger cap IT, or do you prefer ER&D now that that's another space that's opened up and quite a few options there as well? Or do you prefer the mid to smaller rung IT counters?
The mid-cap IT space is a very, very large, vast space where companies do different things. ER&D is one of them. So in our view, we are bullish on the IT sector. Mind you, the valuations across mid-cap ITs are really very, very expensive. Not expensive, very, very expensive. However, we remain bullish on the mid-cap IT space. Companies engaged in the ER&D space, companies are engaged in products where they are supplying systems to the electric vehicles per se. Companies like L&T Technology or companies like Coforge. These are the companies that you should be looking for. However, these stocks are really very expensive and you need to be very, very careful when you add them.
Sure. Jay, if I can come to you, with regard to some of these IT names, we've seen good, decent run-up with regard to where TCS, Infosys, some of the frontline IT names are concerned. What are you looking at now on charts? What are viewers supposed to do? What would you advise them?
See, I've been bullish on Nifty Midcap IT since October 2022, and persistent has been my top pick. And so, in my opinion, even the mid-cap IT names, they have done about 90% of their move. But the only frontline name I've been bullish on is HCL Technologies. And even with TCS's new all-time high, the move within the frontline IT names, the components of Nifty IT index, look a little bit suspect for me. So, while TCS could have a little more upsides to work with, say something like 4,300, I'm looking at the other frontline IT names, Infosys, Wipro, and Tech Mahindra with a lot of caution. So, as long as the Nifty IT index can hold above 36,100, we can still try to be, slightly positive. But once you start seeing the index trade below 36,100, you want to be abundantly cautious. And the trend change for the sector occurs below 34,200. But until that point, you can still be positive even on the frontline name, but, more positive on the mid-cap rather than the frontline.
Well, that's the word coming in. Apollo Hospitals also posted its earnings. Numbers aren't looking too bad. think there's a 57% rise that we've seen in their profits. Few stocks that are not doing too badly, but the rest of the market is actually down and out. Aditya, one last question before I let you go. Have you seen Cummins India? The numbers were good. I mean, it's really, the conversation today has largely been about earnings, but what are you doing with Cummins?
Unfortunately, we've not been able to look at the numbers, so we'll not be able to comment.
Right. Jay, do you track this one?
Yeah, absolutely. A stellar stock and still got a lot of steam. That's what the charts are saying. Probably, it'll, see a correction only after crossing 3,000. So, but, in the very short term, it's extended. If you are already holding, there is, potential to trail this. But, fresh positions, I'm not so convinced because the risk reward is quite, skewed. And the risks are quite higher. The stop loss placement is quite low, somewhere about 1,900. So that doesn't, look good for fresh long positions. But as current holders of the stock, I think this got higher levels to come through.
Sure. So we'll let both Jay as well as Aditya go on that note. Thank you so much for all of your views on India market close. But as we come very close to close, let's have a look at where we are settling off for the day. We're down around 0.4%. 21,750 is where we seem to be settling, just towards close. Let's quickly have the heat map as well. There you go on the Nifty Bank as well, a 1.6% cut, just about able to stay above the 45k mark at the moment, the Nifty Bank. And that's largely because you look at the bottom rung of that, you'll see plenty of private sector banks there. Kotak Mahindra, Axis, you also have the likes of an IndusInd and ICICI among the top 10, 11 losers on the Nifty. Let's also look at some of the other sectors like FMCG. You see Britannia, Nestle. You also have the likes of an Oyster Motors, Tata Consumer among the FMCG space looking weak in trade today. You have also the likes of an Asian Paints. Among the gainers, well, PSU, bellwether, SBI seems to be the top gainer there on the Nifty 50 today, which is a positive. You also have the likes of a Power Grid, good set of numbers. Coal India, which was trading largely flat, is closing well in the green, closing strong. You're seeing good support coming in from IT. There we have it. Markets have closed. And we're getting good support from IT, TCS, HCL Tech. Let's quickly pull up the sectoral charts so that we understand which sectors have done well. There you go, Nifty Media, PSU Bank, no surprise there. Largely led by SBI, I would suppose. Nifty IT closing in the green, 0.25% higher. But Nifty FMCG, there you go. And Nifty Fin is down around 2% thereabouts. Nifty Bank also down 1.5+% at close. Also, if I can quickly look at the Nifty PSU Bank, we'll have a look at the constituents there. There you go, SBI 3.5%, Bob also up there. So the larger ones seem to be pulling the weight at least today. Canara Bank as well, 3% higher, and the likes of a UCO, IOB, where the free float is pretty low, seems to have taken a knock. So that's where we are at. If we can also have the constituents of the Nifty Pharma to kind of cap it off, there you go, the Nifty Pharma, the index was absolutely flat, but you're seeing some traction in Alchem Labs, Zydus Life on the back of earnings, of course. Lupin also up 1% on the back of earnings. But that's what we have for you today on India Market Close. We'll wrap for the day. We'll see you tomorrow. From Samina, myself, everyone who puts the show together, thanks so much for watching.